We're expecting lower prices this week in the S&P after today, and another new high in early June. This is May 27th. It's in the afternoon. And the market has been pretty much unfolding a fourth wave pattern. It had the initial part of it last week. It came down a bit. And now it looks like it's going up, but I don't think the fourth wave is over. It has a little bit more dip coming before it's over, probably around the 29th or 30th of May. And then we have a sharp rally probably to new highs, the fifth wave, ending between June 6th and June 11th. Okay. Once that whole sequence, which started April 7th, is over, somewhere around 2 months later, we should have a reasonably sharp decline in June, which is likely to be a pullback that we never had in May. And it is likely to be fairly deep, at least 50%, possibly even 2/3 of the way back to the lows, which could fill a couple of the gaps that the futures left on the way up. The lowest gap is around 5,300. That is not out of the question. Now, in terms of what the highs are in the early part of June, it's likely to reach the 6,150 or the 6,200 area before coming down, but at least minimally break the most recent high in the 5,900 area before the fifth wave is over. And then what? Well, on the larger time frame, and this is important to consider the scales, the low in April is likely to hold, and that was the beginning of an uptrend into August of this year. All this gyration, the continuation on the upside, which is the continuation of the first wave up, followed by a sharp decline in June, which is just a two-wave retest, followed by a new wave, a new high in August, considerably higher possibly, and then we should see the market consolidate into September, potentially even making another high in September, come down in September and October, and making a low in October or November, and then potentially going up the rest of the year. So we are ultimately bullish until early next year, but most of this year is going to be crazy. It's going to gyrate. First it goes up into August, September, comes down hard again into the middle of the fourth quarter, and then potentially ends the year very high. Okay, that's in line with several cycles. We've shown them before, and we'll show them again. We're also going to be discussing probabilities. Why probabilities? Because there's no cycle combination that is exactly the same as the last time it happened. In order to really understand exactly the same pattern occurring, you actually need significantly more years of data. We have about 100 years of data. You think that would be enough, but it isn't. Because the small cycle interactions with the large ones take even more data than that. Some of the big cycles are hundreds of years long, and we don't have any data on those things. So the bottom line is we do the best we can given the cycles that we do see, and we do have a pretty good idea that the 20-year cycle is dominating, and we've been saying that repeatedly. And if you look at the past few months in the 20-year cycle, it's about 85% correlated with the present market, and going forward it's continuing. And also using our proprietary tools from our market forecast mastery class, we have found that there's a 31-year cycle that has also been repeating. And what is remarkable is how similar the 31-year cycle has been repeating, is how similar the 1994 market is to the 2005 market, both going back a few months and going forward for a number of months into the future. As you can see in this chart, the overlay between the two of them is extremely similar going forward. They both at this time call for a dip, which is what we're in the middle of right now, a small dip, up to new highs, not huge new highs, but a little new high for a fifth wave, followed by a June decline, followed by up into August. And after August, they have slightly different variations, but they all go down into October, okay? So we have a pretty good idea of what the roadmap is for the future. We're ultimately bullish, even though we're still looking for a decent break in June. Even in May, when we were looking for a pullback, we were not looking for new lows. We were looking for a pullback. It never happened. It still probably will to some extent in June, okay? Now, the other thing that's important is to realize the way this works is there are many, think of it as different railroad tracks, and you have the train is on a track, and somewhere up ahead there's a switch. and it can switch to the left and go on this track, or it can switch to the right and go on this track. And those are the larger cycles that are guiding the market. And if one of those larger cycles is not derailed but switched into another mode, which is what happened in April, we thought the Saturn Rahu cycle, the 11.5-year cycle, was going to repeat exactly like it did in 1990 and it did in 1998. It turns out another cycle dominated at that point. The 20-year cycle began to dominate, even though the 20-year cycle was in there the whole time. You couldn't tell which one was going to dominate. And so right now we are fairly clear that the 20-year cycle and the correlates, the 60-year cycle, which is also 3 times it, and a 120-year cycle, which is twice the 60-year cycle, they all agree the market goes up, and most likely into next year before any bear market. So we are not thinking we have started the bear market, which many of the analysts have said started in December. We think we're probably in an ongoing bull market that will turn into a bear market in 2026. We've been saying we expect a bear market, but not yet. And we also say that the high that comes in this bull market may be possibly significantly higher, although it won't be confirmed until we break the 6350 area, which is a very significant resistance level. So if we can break above that and come back and retest it and then go up higher, then we could go significantly higher this year, or at least early next year. Okay. In the meanwhile, the probabilities are not that. The probabilities are we're going to go into an up move that has a sideways mode and another pullback in October, which is reasonably large, before the explosive type upside potential is fully realized in the early part of next year. That pretty much gives you several time frames. The large frame, we're bullish. On the intermediate time frame, we're mildly bullish with expected decent breakdown in June, followed by a rally into August. On the super short term, we're looking for a pullback later this week. The matrix channels are right up against resistance. The 2-month cycle is repeating. The 20-year cycle is repeating. The 31-year cycle, they all call for a break in June. So we're going to stick with that as our probability, highest probability. Second highest probability is the 60-year cycle, which takes no prisoners, doesn't have much of a pullback in June, a little one, and then just keeps going up the rest of the year. And the third probability, the lowest probability, is like the 2002 market, which is also repeating fairly closely. That has the same decline phase in June into early July, but that one is deeper. That one makes a new low. And then it basically goes sideways into the October point, even though it does it a little differently, but that is actually a bottom. And then in 2003, the market took off to the upside, which would be like the analog would be late this year, it would take off to the upside again. So they all kind of agree on the big stuff, but the short term, we're thinking the in-between level, not the super bearish level, not the super bullish level, but some sort of a meaningful 50 to 65% pullback in June, followed by new highs in August.